Welcome to TradeTheNBA.com. This is John's Reporters for the 10th of June here. And, well, Friday we saw, again, good action all the way down to the EBM, back up, new highs, more of the same, but the range, like we talked about. So, still relatively range bound here, but nonetheless producing pretty decent moves. Now, we got an interesting move here from a daily standpoint with the NBI white spiking. Potentially, we could end up with a rollover of our gray MBI reading here at a much lower level. That would definitely generate a bigger push to the downside. So it's really a question now of whether bulls have enough to keep adding at this particular stage, because a crossover there would definitely lead to a much more significant fallback. And of course, the job numbers that came through were super stellar, in a bizarre situation. So that pretty much means what the Fed's going to do. Anything? No, because you can't justify cutting rates into such wonderful employment numbers, even though when we look at the numbers in reality, when they break it out between foreign born and natural U.S. citizens, all the job creation has been from the influx of illegal immigration that's taken place in the U.S. over the last several years. And that's an interesting one because it does keep wages down, which modestly helps with inflation. But again, the simplest thing for inflation has always been energy. You need cheap energy, and you don't have inflation. We recognize this, during the 2016 period where Trump, flooded with cheaper energy and everything went down price-wise, and you saw real wage gains and everything, which have been completely destroyed under the higher inflation. So you can clearly see why there's been some displeasure, at least amongst the polls. From an NQ standpoint, not as bad as the S&P, and so that may be the strength that keeps things from imploding. So we'll continue to watch that. And of course, Shakeout was continuing to rise until the other day, a little bit of a brief step back in there, but it takes longer on the daily. We see it intraday much quicker, and so we'll be able to see it. Now, of course, as we laughed at all of those, people jumping into the bond market looking for lower rates, you can see they just got murdered slowly in one quick moment today. Yeah, and that's going to be the case. Of course, yields have to go back up from, given what you're seeing, go back up from where they were, which is ridiculous. They're still not even close to covering inflation, and that, so it's a joke as far as that's concerned. From an oil standpoint, the deep decline that's healthy for staving off inflation, but you're not in any way in a deflationary environment given this. It's just taking away the added pulse of inflation that took place earlier in March and April. So you've just softened that. Is going to help for the election. It's too late for that now. These are all things that had to have been done many months ago to have a significant impact. Now they might be able to get some positive reading towards the end of October or whatever, but is that really going to make that big a difference? I don't know. And of course, the ridiculousness of the euro rising within the ECB actually cutting their rates. Another foolhardy situation. And we just laugh because, these were all easily seen as, false moves to get people into a potential, idea that. And remember how at the beginning of the year, everyone was talking about, there were going to be 7 rate cuts at the start of the. And I laughed at that because it was the dumbest thing I'd ever heard. But this is what they were selling, and people were buying it, at least for a while. Now it's pretty hard to imagine. Of course, gold taking a bit of a hiatus within that, and then it fills in even more positive extremes coming back all the way across here. We're getting fill back into that range, so that from that standpoint, healthy. Gold still going to be a major driver unless you see oil continuing to plummet. But if you see oil continuing to plummet, you got to question: is this because of a massive supply increase or a real significant slump in worldwide demand? And that is a broader issue that will start to unveil itself. From Bitcoin, a little bit of back and forth. Modest. Again, these are all going to be the resources that move away from it because, again, from a treasury standpoint, who really wants a treasury? The only one's going to buy them are the feds, which is just you're buying your own debt that you're creating. I know it sounds like a Ponzi scheme, but you can't say that. ETH. Also, a little bit of back and forth. But again, where are you going to put your money? The market's the only place where people have to go. But again, that's going to get into problematic because you have such a narrow trade window where everyone wants to be in tech and some of the high flyers that there's not a whole lot of room there, and a lot of those getting frothy to the point where it's hard to justify being in those. And in the broader market, you see a lot of weakness. So that's problematic. And as that starts to explode, that's when the market really will begin a deceleration, or at least a broader sell-off to more reasonable values. And so we can see from a 50K standpoint, we ended up with the MBI white spike here as we were approaching new highs. Always a scary one. And as soon as you see that magenta dip below, you know that the end is arrived. And sure enough, that happened to correspond to DOC spread. And then after that, it was just the cascade. And we filled back to the 50% move at this particular stage. Currently, still within a weakness, so expect that to continue in the near term. From an intraday, going back to Friday's action, we ended up with that oh so wonderful jobs report that just ruined all the hopes of everybody that rates were going to be cut immediately. And that created a nice spike sell off to clear out call options, and then of course to take away the puts, they drove it up, and then it just went back and forth until the end of the day. It was down lower at the start of the new session for the next week's option play. And this is what we've been talking about for some many months, that options were having a much bigger play on the volatility that exists within the overall market. And I think that that's only going to continue in this particular case. People find there's protection in that because you have your all-in bet and or hedge that you've created, and you can play that volatility both ways with your bull spreads or call spreads. So it's either way you can be covered. Of course, I've always thought those limited their potential, but still an option, and there's plenty of people on the street that still let me play hedges. So intraday here, we can see here in the European session, just really ugly. And most of this is a reaction to the EU elections that were taking place over the weekend, where you saw most of the controlling parties that were in power making all the decisions phenomenally got trounced in France, it was an obliteration. Germany as well. You saw what they call right wing, but mostly people saying, hey, we need to cut back on this unfettered immigration, this spending, this moving towards war with no practical outcome and no real need. And there was just a real big pushback from people in broad numbers. So I think that a little bit of potential sanity has returned to some people who see some of these escalations as just foolhardy. And this reminds me back of the COVID period where there was this psychosis where everyone had just seemed to lost their mind when it came to civil liberties and everything else, and we returned to the 30s. Literally is what that looked like, particularly where I was here in Italy, and definitely you could say the same thing for places like California, some states, New York, and that just were insane. But you've seen the same insane behavior as far as this escalation by NATO, pushing for World War III, and for those paying attention, you've noticed that they're using U.S. guided munitions to attack the early radar systems for Russia deep inside of the southern part near Crimea area. For what? Really think that Ukraine is going to be launching nuclear weapons that you would need to destroy their early warning systems for nuclear attack? Very suspicious stuff. And then, of course, the U.S. spending huge number of troops, up to 300,000, to the European front. Why? Again, this all gets into this what are we doing concept, and I think that's probably going to play forward in the coming election, and I think the market is going to react to that, and most likely that reaction is going to be the negative side because from a market standpoint, higher inflation and Biden policies have been doing great for the market, not so much for everyday consumers. So that's the long and the short of it, and put it all in a little nutshell. That's where you have things at this particular stage, and I think that the potential downside far outweighs the upside, and that's where the climbing to new highs is a wall of fear because at a certain point the music's going to stop, and when it does, there isn't any room in the exits for all the people that want to sit in that final chair. So just be aware. As always, though, anything relevant happens, I will put on the Skype chat. Trade well. Have a good one.